Good life, and they want a good life, yeah. G-Wagon a class, step in a hit, mega fast, in a Farraga, my glass, chop up a freeway. Money up, your flash, but if you're
Hey TSWFX family, welcome to another episode. This is a review on GBPJPY. I won't be making an in-depth analysis on this pair. I'll just be doing it very quickly. So already we can see on the monthly time frame, given that we're in a new monthly candle has been closed. So let's review what's happening here. We have a low here. We had a high being formed there. After having that high form, we had a retest of this low. So we're seeing that double bottom on the monthly time frame. We had a strong rejection, and for 4 months we had a movement upward. After that movement upward, we can see that this supply zone was respected. So here we can see wicks on the monthly time frame, and then this long wick, almost 60% of that candle's length will be a wick. So we can see here that there was a strong sell zone in this region, and we normally represent that by using the rectangle tool. So just draw that for clarity. So we can see in that zone that there's a lot of sellers there. However, if we look on it, we can see that this seems like an inverted head and shoulder. And at the same time, we can say that this is in a downtrend and this is just a retracement for a continuation down. So there's always two bias for the market. Let's do a quick retracement for this. And doing a retracement, we can see that like that. We can see here that price respects the 61.8% retracement, and having that 61.8% retracement, we can say, all right, fine, there is the downtrend is being respected. So there's a lot of possibilities that is happening as we can see on the monthly time frame. Going on the weekly, so on the weekly time frame, we can see that it wasn't a downtrend. We had that 3 touch on support that is very strong. After having that touch on support, we can see that's massive movement upward, hitting that 61.8% retracement level there that we spoke of. And then after hitting that level, we can see that price made all the way down back to this support level here. Even though this is a long wick that happened in the beginning of 2019, January 2019 thereabout, we can see that this long wick closed in this region. So we will say that the support is here because you can see that the next weekly, 2 weekly candles after that did respect that support structure. So even though it made it all the way down to here, this is a support structure. So we had that what seems to be a left shoulder there, what seems to be the head, retest of that neckline, and then retest of that shoulder level. So a possibility of inverted head and shoulder is being formed as well, as long as the support level holds on the daily time frame. So on the daily time frame, we can see the uptrend, right? We can see that nice uptrend in this structure, rising channel structure, and I thought that this would have been a strong support. However, we can see that it found resistance there and it fell. This is almost on the 50% retracement. So let's do a fib retracement. So on the fib tool, we can see that price almost hit that 50% retracement level. It's not quite there as yet. A possibility is the new monthly candle that will be formed will hit this support level here, right, and then continue up, or we can have the support level broken and then continue down. Who knows? Or maybe it will make let's use that tool. Where is it? Drawing tool brush. All right, so we can have that price coming down to this third touch on the 61.8 and then going up. So that's a possibility of happening. So after that happening, if we get that third touch on the support level at the 61.8, or we can just have the continuation directly from there, we can say that price is in a bullish movement, because this could be a bear flag, potential bear flag. But again, it can also be an inverted head and shoulder on the higher time frame, which is also a bullish move. And then if that support is broken, we can say, okay, maybe it's going to form a triple bottom, or maybe it's going to continue in the downtrend that is in on the higher time frame. But let's make more sense of what's happening here, why price fell from this level. So that's where we're going to the lower time frame now to get some clarity. So on the 4-hour time frame, we can see this structure. So what we have a rejection from this level. Price came and formed this bearish flag structure, or bearish flag type structure. We had 1, 2, 3 touch on that resistance level, and again the third touches on either the resistance or the support are very strong signals. So we had 1, 2, 3 on that resistance level. When the market opened last week, it opened with a gap, so it opened here, went up for the first 4 hours, and then after that it was just all the way down aggressively, very aggressively, until it hit support. And this 4-hour candle that is here seems like a tweezer bottom, so it's potentially a strong support level currently on GBPJPY. So again, the possibilities that I have for this is most likely that it will either respect this 50% retracement continuing up, or it may range and consolidate a bit and then create a third touch on this support structure at the 61.8 for a continuation up. So for GBPJPY, possibility of a long still from these levels, these stronger support levels. However, if these support levels are broken, then there's a strong possibility that it will continue the overall downtrend on the higher time frame, even though on the 4-hour and the daily time frame overall, we can see it's still in an uptrend, and this is just a correction for that. So, and those who do the Elliott wave can know that you can have 5 waves up and 3 waves down, and this would have been A, B, C. Let's do it more clearly. So normally they will have that A, B, that 1, 2, 3, 4, 5 come up, 1, A, move down, A, B, C correction. So either way is a possibility that it's gonna continue from that support structure. So thank you guys for watching, and I hope you guys enjoy. Remember to subscribe and feel free to share your ideas.